Am I audible, right?
Yes, loud and clear.
Yeah. A very good evening, everyone, and welcome to 53rd episode of the Friday Fleet. We are perfect time to discuss today's topic, one area that focus a cause and confusion that the tax treatment of ESOPs, RSUs, and ESPPs, and understanding how to correctly calculate the perquisite's value and report it in the income tax returns is absolutely more essential. So today's session all about making this easier to understand. I am Sir Shali Salvi, a core team member of the Friday Fleet and moderator for today's session. We are diving into a very relevant topic, treatment of ESOPs, RSUs, and ESPPs in the income tax return. This session will help us navigate the complexity and ensure we handle our income tax return confidently. So without taking much of your time, I would like to invite CA Kalpana Thakur ma'am to deliver the opening remarks for today's session.
Thank you so much, CA Harshali Salvi, for starting the session so energetically. It gives me immense pleasure to start today's session, 53rd episode of Friday Fleet, a very important topic, treatment of ESOP, RSUs, and ESPPs in income tax return. 31st July. We will soon approach the due date. As Harshali has mentioned, perfect time to have the session. And in today's era of globalization, where most of the startups are into the ecosystem, where employees are receiving more often these perquisites, most of the time we professionals face the situation that how to treat when at the different stages when there is a vest exercise or selling of these options are happening, how to treat it. So we are going to have the enlightenment on this topic by our esteemed speaker, respected CA Durga Krishnamurthi ma'am. Here, uh, I'm deviating a little bit from the topic because today's we have formally announced our core teams. Allow me to share my screen. As I have mentioned, as I have announced in our group in the afternoon today, हम अकेले ही चले थे लोग साहिरे काफिल में लोग जुड़ते गए काफिला बनता गया. So me and Poonam was the one who were working at the start, and Friday Fleet is a thought baby of respected CA Dr. Rajkumar Adukia sir. But now we are not alone. We are having a powerful community, powerful core team who is working every week, every day to make every session successful and reach out to as many members as possible with only one motto, upliftment and growth of our community. I would like to congratulate and grateful to all our core team member. Yes, of course, CA Poonam Pathak, who is always there with me from day one. CA Sunita Rathod, who is handling so nicely the quality of our sessions. Our today's moderator, CA Harshali Salvi. Congratulations, Harshali, for being one of the author in Ethics in AI publication of ICAI.
Thank you so much.
From Gandhinagar branch of ICAI, CA Aishwarya Joshi, who is handling social media of Friday Fleet. Someone who has worked tirelessly to bring our today's esteemed speaker, CA Jyoti Maru, our speaker onboarding lead. Thank you so much. Without you, it wouldn't have been possible to have every session and have the coordination. And CA Gunjan Jain. CA Gunjan Jain, Aishwarya and Sunita, they'll join us shortly. Maybe words will fall short of if I'll be telling what exactly the kind of support we are receiving from each other to do to make every session count. Today we are standing on 53rd episode. There is a lot of effort, commitment, and dedication that goes on to bring out every session every week. So thank you so much to everyone. Now, without taking much time, ma'am, we have promised that 5 minutes we will take. So I'm giving back to Harshali. Over to you, Harshali. Thank you so much.
Thank you so much, ma'am, for this insightful opening remarks and for the introduction of our team member and announcement of the team member, core team member who are doing work behind the scenes. So now let me introduce our today's speaker, someone who has built a solid reputation as a trusted advisor in the taxation and financial matters. CA Durga Krishnamurthi, ma'am, is a fellow chartered accountant with over 20 years of professional experience. She's a sole proprietor of well-respected CA firm with offices in Chennai and Bangalore and has been running a successful independent practice since 2001. Her core expertise includes individual taxation, management audits, and financial advisories. For a wide range of clients from high net worth individual to MSMEs and startup. Her deep understanding of regulatory frameworks, compliances, and evolving tax norms make her especially well equipped to address today's topic. So beyond her professional work, Durga ma'am is an active contributor to social cause and currently serve a leadership role with a Chennai-based charitable organization, which is demonstrating her commitment beyond just the professional space. So we are truly fortunate to have her with us. Please join me a warm welcoming CA Durga Krishnamurthi ma'am to speak on treatment of ESOPs, RSUs, and ESPP in the income tax return. Over to you, Durga ma'am.
Hi, good afternoon. Thank you, Harshali ma'am, for the good introduction. Thank you, Kalpana ma'am, to start off the session. I think I will straight away start my presentation. Let me share the presentation with you people. Please let me know once you are able to see.
Yeah, it is shared.
Okay. Yeah. So again, good afternoon, everybody. The topic which we are dealing with today is treatment of ESOPs, RSUs, and ESPPs in income tax returns. So being that ESOPs, RSUs, and ESPPs, primarily we will be discussing only individual tax returns today. And I take that most of our audience is comfortable with individual tax returns as it is. We are only going to focus on this aspect of it. So next slide. Yeah. Of course, the main issues we will handle today is shares as perquisites. We will get to that point, but all ESOPs in whatever form are treated as perquisites under section 17(2). Now, these may be of Indian companies or foreign companies. So accordingly, there will be tax implications. We will look into that. And as tax practitioners, we have some responsibilities regarding reporting and compliances. So we will handle that also. Yeah. So the type of stock options that are available to an employer to give to the employee, maybe in lieu of or in addition to their compensation. Whoever is giving these are naturally companies, either private limited or public limited, listed, unlisted, because you have to have shares to give ESOP. This only applies to companies, first of all. The first kind is what we call ESOP, Employee Stock Option Plan. This Employee Stock Option Plan is usually always a part of the CTC. It is more popular with smaller companies or startups because they cannot always afford to compensate highly. And they add this ESOP to that compensation. So as the company grows, the employee can make advantage by selling his shares. ESPPs are employee stock purchase plan. So these are in addition to, technically this is how it should be. The definition is that these are in addition to what is your compensation. The company is offering, now that you are my employee and maybe you have worked so many months or something, I offer you give you a advantage that you can buy some of your company shares. I will give you a discounted price. That will be the ESPP. RSU is a restricted stock unit. That is a full form of it. But what it means is that these shares are not given in some interval, like a fixed interval or something. They are granted now and then, maybe as an incentive, maybe as performance milestone. Maybe the employee knows it is coming, maybe he doesn't know. But this will not be a fixed quantity every year. So maybe the employee will know only during the year or whatever. This is how it is. But in practice, of course, ESPP and RSU, sometimes they are interchangeable. Companies do use the names interchangeably. And in case of ESOP, it's almost always given by Indian companies. ESPPs and RSUs are almost always given by Indian companies, but the shares are of the parent company outside India. Like if your employee in Microsoft will be given shares of Alphabet, which is registered in the USA, or a SAP employee will be given shares of SAP head office in Germany. So that person who has never left India can be a holder of foreign assets in terms of shares. If anybody wants to like have a question, maybe they can in between. If there is something very much, sorry, I need to restart the presentation. Just give me a minute. Yeah. Huh?
Ma'am, presentation will be shared.
Kalpana ma'am, Harshali ma'am.
Yes, it will be shared in the group, in our Friday Fleet group.
Okay, thank you.
Okay. So now before we go to the main topic, I will just go over some of the terms that we hear of in this area. Not all of these terminologies which we will be actually using, but we will come across it, so we need to know it. Now, these shares, they are granted, they are vested, they are exercised, but there is nothing but being given the permission to buying and selling. That's all it covers. These are just technical terms. In that, the grant date means the date that agreement to give these shares, whether ESOP or ESPP or whichever was entered into between employer and employee. Vesting date is the date from which he can start buying the share, which means he has completed 6 months or 1 year or whatever that agreement is. Vesting period is the period between that signing of the first agreement and being allowed to buy the shares. Exercise period is after vesting. They'll say, okay, within the next year you buy the shares, otherwise your chance to buy it is going to lapse. So that will be the exercise period. Exercise date, that is the important term for us. That is when the option is finally exercised. Price is the discounted purchase price which is bought at. That is called the exercise price. Now, sell to cover is a term which we often hear again. In some kind of, like in all the shares, of course, there is going to be a component of tax on perquisites. Now, most of the time it may be taken from the employee as a TDS, but sometimes, especially when a local Indian company is handing out shares of parent company, the Indian company will sell some of the shares which are due to be able to cover the tax and give only the balance shares to the employee. So sell to cover is a point that you will come across, a word that you will come across. Good to know what it means. Yeah. So of course, I think this is very evident. Are stock options income? Yes, stock options are income in stage 1 at the time of receiving the option. This is called the exercise stage or vesting stage. Whether it is a ESOP, whether it is a ESPP, whether it is a RSU, all of them are taxed as perquisites only under section 17(2), which means whatever is the taxable amount of this ESOP or RSU or ESPP, you will have to declare it in the 12BA, giving the details of this with its taxable amount, and that will be declared as part of perquisites in section 17(2) while declaring the income in the ITR. Okay. Now, what will be the taxable amount? Suppose there is 100 shares of the company being given, and the market value, that is the value maybe in the stock market, maybe if anybody else is going to buy, if it's not a traded share, if that is 100, then 1,000 into 100, 1 lakh is considered your FMV. I give it to the employee at only 80,000. So employee is paying 80,000 for it. The value is FMV is 1 lakh. The difference between the two, 20,000 rupees, will be the amount that is going to be added as a perquisite, that is the taxable amount. Okay, so it is going to be reflected in 16A, Form 16 and 12A. Now here again we are seeing this sell to cover. So what this means is that of the 100 shares, say again same example, I have the shares are sold at whatever 1 lakh. Now I have to deduct TDS on this 1 lakh. The employee is in the 30% bracket. I have to deduct 30% TDS. So instead of deducting TDS separately, I sell some of the shares at that same value, whichever is the FMV on that date. And I use that whatever amount, 30,000 rupees, to pay the tax on that 1 lakh, and the employee will only get 70,000 worth of shares. So as far as the employee is concerned, he has only got that 70,000 shares, which is the post tax value, and at the price of 1,000 rupees per share. Sell to cover has been used for TDS. So in this case, the sell to cover value will be its taxable value post tax. So that means, I mean, the taxable gross post tax. So still 1 lakh is only the taxable, 1 lakh is the FMV minus whatever he has given. I mean, maybe they have sold it to him. Small correction. In this case, 1 lakh is, we are assuming that 1 lakh is the taxable perquisite. Okay, if I have confused people, I will clarify once again after finishing everything in the question answer session on the sell to cover mechanism only. Okay, let me go to the next. Okay, now we just saw that the capital gains is a second thing. When the shares were given to the employee, there was taxation at perquisite at the one point. So now the employee is the owner of a set number of shares. Okay, these are shares for which tax has been paid as an income. He can continue to hold on to these shares for as long as he wishes. There is no compulsion that he needs to transfer them or sell them or anything. But of course, they are no use to him just sitting in his hand. At some point, he's going to sell them. At that point, he is creating a separate taxable income by selling the shares. At this time, he will be selling them in the open market at the open market rate. Whereas the purchase price to him has only been whatever the discounted purchase price has been given to him by the company. Okay. So this capital gain tax, now it gets triggered when his shares are sold. We are using the term vested shares here because through the process, first it got, he was granted, then the granting became vesting, then the vesting he converted into own holding. So those held shares, vested held shares, when they got sold, we got a capital gains got triggered. Now, how this capital gains gets taxed, that depends on what kind of company it is, what kind of share it is, and when he has sold it, how long he has held it. This we will see in the next slide. But how is the capital gains calculated? Normally, we calculate capital gains for any property as sale proceeds minus purchase value. So here we would argue that his purchase value was lower than market rate. But on the other hand, the difference between whatever was the market rate when he purchased it and his own purchase price, we have he has rather paid tax on that amount during the acquisition. Only then he has acquired it. So even in the case of all of ESOPs, his purchase price, deemed purchase price when he sells for the purpose of capital gains, will be the FMV on the original exercise date. That is nothing but the date when the vested shares were sold. So we know we have deduced what amount is the capital gains. It is sale proceed minus market value. Sale proceed will obviously be market value today minus FMV on the date when he purchased it from the company. Okay. Now this is a summary. Of course, I have sourced this chart from elsewhere. I have declared my source, but this chart is quite clear, and hence I borrowed this chart. Rates are the same rates as would be applicable for capital gains of any property. Rather, when this ESOP has been in the form of a share of an Indian listed company, say somebody in Infosys has received Infosys shares, then the rules for capital gains, whether long-term or short-term, are the same as for capital gains of listed shares, which we normally calculate. That is, if you're holding, and from this current assessment year onwards, the holding year period being 1 year, the short-term tax rate will be 15% and the long-term tax rate will be 10% up to 23rd July 24. That is acquisition up to 23rd July 24. Any acquisition beyond 23rd July 24, the 15% rate has been changed to 20% rate for short-term. And in the future, of course, the long-term rate for purchases after 23rd July 24 will be at 12.5%. This is taken to mean when they say purchases with effect after 23rd July, it means that the date from which these shares were exercised, not vested or not offered. From the date of exercise, if that date falls after 23rd July, then the new rates will apply. Okay, so that is how it is taken to understand. But as we go along, we have not yet filed any returns with this new scheme. So there will surely be some maybe some discrepancies or whatever. But this is how we understand it as of now. Now, when it comes to, say, Indian unlisted companies or foreign unlisted companies, these are treated as any other property. Unlisted shares are not treated the same way as listed shares. The rate for unlisted shares are if it is a short term, it will be in your regular slab rates. If it is a long term, then up to 23rd July, it is 20% with indexation. And after it is 12.5% with indexation. Of course, we assume that the relaxation that was brought in by amendment will also apply to these. Now, in case of a foreign listed company, it is a listed company. So, should we treat it the same as Indian listed company? The answer is no, because a foreign listed company is deemed to be listed outside India, not listed in Indian stock exchange. And therefore, the rules which work for Indian listed companies will not work for foreign listed company. So, foreign listed company shares will be treated same as any other movable property or unlisted company shares, meaning that it will have the same rules for indexation and the same tax rates. Again, I have repeated here, but there's no need to repeat again. Sale proceed is the actual proceed. Purchase cost will be fair market value on the exercise date. Okay. Now we come to the more practical aspects. Now we know that, okay, if somebody has received ESOP or ESPP or RSU, we have to ask the client some questions. He will naturally be a employed client. He's going to be working in some company. So he's going to be having the Form 16. We will naturally be taking the Form 16 from such clients. We should ask for the Form 12BA also, because it will give details of the perquisite and the valuation of the perquisite. This will help with the basic filing, that we will be able to know how much is his value to put towards perquisite. We will know whether it is from the same Form 12BA, you will know if it is a ESOP or ESPP or RSU, because it is usually mentioned in this 12BA. Okay, right now I am taking this only from the viewpoint of the person who is going to be filing these taxes. Later, we can go back from the viewpoint of the person who is deducting the taxes and who is making the Form 16 and 12B. So for now, we are doing this. Now, next, once the person has exercised his shares and he has shares of these companies, whether Indian or foreign, we need to know whether he has traded, whether he has sold or bought. If it is an Indian share, it will appear in his AIS, it will appear, we will be able to get the information easily. But if it is a foreign share, then we have to ask the client to share the trading statements. So you will know whether any transactions happened during the year. You will also know how many they still have, how many shares were issued, and any other transactions on those shares like bonus or some such thing. You will come to know that. You have to ask for the share trading statement. Also, there is one more aspect that on foreign company shares, of course, most countries, most prominent, I would say, or developed countries from where these these Indian companies originate, which are having parent companies abroad. In most of these countries, there is no taxation on capital gains of shares. So therefore, that aspect we only have to see in our Indian tax return. However, when this employee has been granted shares, there will also be sometimes a dividend on these shares. That dividend may be paid to him in cash, or it may be paid to him in form of more shares. Whatever it is paid, most countries deduct tax withheld at source on dividends. So if we again, and since he is an employee in India, we assume he is a tax resident of India, he has to pay tax on the dividend that is earned outside India also, because he is holding these shares in India. Now, this dividend, we will come to know of the dividend only when we have the tax withheld certificate, or we may come to know from his share trading certificate also. But since he has already been taxed for it outside India, it is possible for us to claim the deduction for this tax. We can claim the rebate. So for that purpose, he has to submit his tax deduction certificate from overseas. We have to ask for it at the time of preparing the return. Now, sometimes employees, if they are selling the large quantum of their shares for the purpose of, say, investing in India, or for the purpose of financing something else, they may, they may get into a large quantum transaction, and you will not come to know about it until the end of the year. There may be a lot of tax, and they may get into penalties in the nature of 234B, 234C. If you have a good rapport with the client, it always pays for them to give you this information, not only when they get their Form 16 at the end of the year, but throughout the year, so that you can factor it into the advanced tax planning of this client. Okay, so many clients come at the end of the year. In fact, sometimes they come on 27th July and expect that they will be able to get away without paying tax, because they don't have idea of how this amount is going to get taxed. Yes, so always encourage timely disclosure. Okay, now that is as far as the capital gains were concerned. Once we know what is long term, what is short term, how we are going to tax those capital gains when some shares have been sold, let us look at the other aspects arising out of ESOPs, ESPP, and RSU. One aspect is that of dividend. It may be Indian dividend, from the Indian shares, or it may be dividend overseas, foreign dividend. Now, Indian dividend, of course, we will report it as income from other sources. We will pay the regular tax on it. There will be a TDS deducted. It will get factored in. Foreign dividend, that information, as I said in the previous slide, it will come from the client's statement, or we have to ask the client for that. Now, if the client has a tax deducted information of the foreign country, then under the DTAA rules, we can claim a rebate under Section 91. In the income tax form itself, in the ITR 2, we can claim this reduction. But for the purpose of claiming the reduction, we will have to file a Form 67. Form 67 gives details of the tax paid in the foreign country, the rate for the same amount of income paid, which is payable in India, the difference, if any, which will be factored into his income, or rather his taxes for the current year. And to be able to claim that, we will have to quote which detail. The form is very simple, the Form 67. We will have to quote all those things. I will have to upload the Form 67 along with the foreign tax paid certificate. It is similar to our tax paid challan in most countries. I have one example which I will show you at the end of this presentation. And it is quite similar to our challans. We just have to fill in those details. Now, one thing about Form 67, unlike a lot of other forms which go with our ITR filing, there is no last date for Form 67. You can file the Form 67 at any point of time before or after the ITR, as long as it is filed before the ITR is processed. If you file the ITR, you claim deduction under Section 91, you claim the rebate, but you don't file the Form 67, the client is not going to get the rebate. However, if you file a revised form within the same time limit, the client will still, you can still file the Form 67 again, and you will get the refund. So there is a peculiarity of Form 67, which means it is required for the purpose of claiming the rebate alone, not for the purpose of filing the ITR. Okay, I think this is. Yeah. Okay. Now that there is a person here who, let us keep aside the Indian shares as ESOP for now. Let us now concentrate here on what if you have received the shares of a foreign company through a ESPP or RSU. That foreign company share automatically becomes a foreign asset. Now, when you are holding a foreign asset, that assessee has to file his ITR in ITR 2. So even though he may only be having, say, income from salary and income from other sources, he will still have to use ITR 2 because he has to now report the foreign income in the foreign asset schedule. Okay, so foreign asset schedule in ITR 2 is required. That over there you have to give what is the opening balance of this share, what rate was it at, how much was received during the year. So if he has received 8 or 10 different times during the year, there will have to be 8 or 10 line entries. Now, to be very frank, up until recently, people were filling this section very haphazardly. Because sometimes there are 12 or whatever, 8 to 12 to 10 to 12 tranches of this ESOP or ESPP, and making 8 to 12 entries is quite cumbersome. But now department has become quite strict on the foreign asset declarations. So I would recommend that each tranche of not granting, but rather each tranche of exercising be mentioned on a different line, because each is going to be at a different rate. Okay, that is one part of it. Then, since I said earlier, the foreign shares are, though they may be listed in foreign countries or they may be unlisted, as far as we are concerned in India, for income tax purpose, they are considered as unlisted shares. Therefore, this part of ITR 2, which says, does SSE hold unlisted shares? Yes, we are in the practice of filling in this table also. Because otherwise, when in the succeeding years, when you try to fill the column for sale of unlisted shares, you may not be able to do that, because the system will be looking for unlisted shares held earlier. So it is always recommended to also list the ESPP RSU shares or the foreign company shares which you hold in your unlisted shares. Then the third place where you have to list is, of course, if assessee is holding more than 50 lakhs and has an asset liability table has to be filled, then there also you have to make sure that when you are showing the value of the assets, make sure that the closing value of these shares is also included in the asset liability table. Though there you will not be able to put details, but at least the amount should be there. Okay, so this is a summary. There are one or two points which I may have skipped. I will cover at the time that we are doing the question answer also. That yeah. So basically, an ESOP or a RSU or a ESPP is taxed at two stages. The first stage is when the employee exercises his option and it becomes a perquisite. This stage of taxation is handled by the employer's payroll department, either in the way of deducting the relevant TDS or by way of selling a certain amount of shares to make up the tax, which also is paid to the government only, but that will not be TDS because it is adjusted in the shares. And whatever that first part, the number of shares which come to the employee through his Form 16 will be tax paid shares. Now, very often employees will have the idea, or they'll come to you saying that my ESOPs are all tax paid. So you please file the returns. There is no further tax dues on these. Because though a lot of companies do hold a training, many people are unaware that when they sell these shares, capital gains will accrue to them as like sale of any normal shares. Okay, that stage 2, capital gain on sale of shares, is one where the awareness is little less. So we have to be aware of that. And I think I have explained how exactly that capital gains will be calculated. Now, yeah, these other 2 points also I have covered earlier. One is documentation is necessary, disclosure is necessary. One documentation which I did not cover in my previous slides is this. Now, I have been saying that shares will be granted at various intervals or various times, maybe in the same quantities or different quantities, but employee may exercise at various points of time. Now, similarly, employee may also sell at various points of time. So, how do you decide what share he sold when? Most of the time, as a tax preparer of return, we will not have that information that something purchased in 2021 for say $1,000. That was the FMV of it at that time. Whereas he purchased again in 23, he exercised. At that time, $2,000 was the price at which he exercised the option. Today, he is selling it at 4,000. So, how to decide whether which of these lots he is selling? This information, since they are all demat and most of the share repositories, the depositories are not giving the numbers of the share, we as a practice, we follow first in, first out for the valuation of the shares. So either the employee has to keep track, or if it is a regular client, we keep track by way of a table that in 2021, so and so month, these are all receipts of, these are all the options exercised at so and so rates, and you keep that aside in the employee's file. Next year, when some amount, maybe that is the first tranche he received, further in future, whenever any tranche is being sold, you start with the first lot and keep like literally using the FIFO principle, keep selling the, for the sake of assuming the purchase price, you will take the FMV of the first lot and then second lot and third lot as it will be applicable. Okay, so I think that was one thing I had wanted to cover earlier. I didn't cover it there. This is what covers the most of the main issues. Now, I just would like to show you a summary statements. I have blanked out the names of the clients, and I just want to, these are the kind of documents you will be handling. this is a year-end holding. It is designated here in rupees, but the quantity shares are in point, I mean, something point, something, etc. units. And this is actually, this is from a European company. What we need to see here is how much ever that person owns at the end of the year is quoted here. That 223.60114 shares the employee has. The value of this share is the value on the date that the company, that the employee had exercised. Okay, so that you can say it was the cost of that value. Now that you see, this is what we will be interested in, total value. Similarly, here the RSUs, they have been vested. That means the employee owns this also, this 5 and the 139 at so and so value. Available value means that it is not available for vesting. It was already utilized, and the total value that is held at this at the end of the year is this 3891. Okay, that is the value that was held. Of course, we will each company and each holder of whatever bank which is dealing with these has a different format, and each country has a different format. So after you see a few, you get used to how it should look like, and which is the actually vested component, which actually is the component which is still held, what is the sold component, and what is the value. I have one more statement also, which I don't know, it is rather small. I don't know if you are able to see this, but here, this is most American company reports tend to be like this, where they are giving you the ESPP values, they are giving you the RSU value, and they are giving you the whole detail in the final year, final summary at the end of the year. How much was it in the beginning? At what rates was it vested? At what rate was it exercised? And how much is still being held, and how much was sold? What is the TDS? So if you get a good detailed statement like this, it really helps. But not all companies will give you a statement like this. So in which case you have to ask for whatever is available with the employee, and we have to make do with that. I mean, we will have the main things. We will have to create the rest of the tables ourselves. It happens a lot. Now I will show you a sample of a tax deducted form. In the United States, it is called a 1042S. In Europe, each country has its own format. Like an SAP employee will have one format that comes from Germany, and some other Spanish company has its own, Spain has its own format. So each European company will have its own format. But in this, what we need is the number of that is the serial number of the document, how much the percentage at which the TDS has, I mean, the tax has been withheld, and how much that comes to in dollars. Now, based on what was the date of deduction, we have to calculate based on the exchange rate on that date, what it would be in rupees to claim in the return through Form 67. Okay, so that much conversion we do ourselves. We do for this tax receipt, we do it as on the date of the tax deduction. If we do not have any date, then we will take default as the 31st March of the end of the year, because that is the only date that we, I mean, that is one standard date that we have access to. We assume that it was deducted of the last year. So, yes, I have that. This is all for now, and I think maybe I finished a little earlier, or maybe I finished right on time. But now I am throwing open for questions.
Perfectly on time, madam.
Thank you. Thank you so much.
Participant, please share your question or raise your hand to ask questions if any want to ask.
Ma'am, I like to ask the question.
Yeah, please.
So, ma'am, when the shares are given as a perquisite to the employees, whether we should calculate the short-term capital gain also when there is shares are sold to cover that tax, perquisite tax.
Yeah. No, that's a good question. But what happens is the sale of shares, that is cover to sell, is done on the exact same day as the day that it is exercised by the employee.
Correct.
Okay, so the rate is the same. There is no short-term capital gains there. That is what the employer takes care of that, and it is also assumed. Even if there is a 1 day back and forth, which may be happening in practice, it is not the practice to show any capital gains for that. And
Okay.
if at all it is also, then we assume that the company takes care of it when they are doing the reduction.
Yeah, but there are some views on this, ma'am, ki we should show it as a, because practically the shares are exercised and then sold. So it should be shown as a short-term capital gain.
Yes, but
Short-term gain or loss, whatever it is.
like I said, to avoid this, most companies when they do this thing, when they do to sell, cover to sell, they always do it at the same rate. If they do it quite instantly, because like every topic in income tax, no, we can have 5 specialists, we can have 6 opinions. So they finish it on that day itself. It is not like allowed to get into an issue. Otherwise, yes,
Understood, ma'am, that I understood that it is at the
so
same
definitely,
rate.
say if there is a gap of 10 days, or there is forget, there is a gap of 1 day and there has been a huge difference, then yes, it has to be reported. But then who will report? The company has to report that I sold it for a different amount and you also have a short-term loss. Okay. But again, most
The
of the
client,
time,
the
most of the
employee
time it
should
is a buyback. Oh, let me finish. No, most of the time it is a buyback. Like they may not even sell it in the open market. At whatever rate that they are giving to you, or whatever rate is required for the purpose of fulfilling this responsibility at the FMV, the company will buy it back on the same day.
Okay.
Okay, so they are taking care of that aspect. Definitely, it is an aspect. It is an aspect which has to be actively taken care of. Okay.
Thank you.
Okay. Thank you so much. Yeah.
Please raise your hand if anyone asks to query.
Ma'am,
Or also you can put a question in the chat box.
excuse me, ma'am, Manjula here. So that, ma'am, you said no sell to cover transactions.
Yeah.
They're exactly that you're selling that they are buying it back. Many of the clients where we have seen it, they are selling it outside the market and
Yeah.
they are doing the tax.
That's
So
also
if
possible.
we have got 100 shares, they will vest only 60 and 40 they will sell it and give.
Yes.
For that 40, whatever the tax is paid, maybe a minimal of variation will be there, $1 or $2 or something like that.
Yeah.
There are some places there will be a difference. That's the thing. Should
That
we?
is the thing. No, that is the question. Should we or should we not? But the thing is, you will not even come to know about it, because even if there is a difference, that is going to be adjusted in your number of shares and then only given to the employee. So the company has to worry if they are incurring any kind of short term. Maybe it is even a few, not even 100 rupees, tens of rupees. So I think both, even the department has taken the view, and all practitioners also take the view of ignoring that amount if it is small. In future, if somebody uses this loophole to start making some money in short-term gains, then it may become a question. But as of now, out of the literally, I think a few hundred I may have filed returns of this nature. It has never been an issue in terms of department raising a query.
And one more thing where we saw that sell to cover this thing, no, they will deduct that tax also, no? That can we claim FTC for that portion?
No, I didn't hear you. Can we claim?
See, when we are calculating the perquisites, we calculate for the 100 shares only.
Yes.
Okay, but when they are allotting the shares, they will give only 60 as a quantity to us.
Yes.
The remaining 40 is being deducted for the purpose of tax.
Yes.
That tax, whatever we are paid in foreign country, can we claim FTC?
No, that we cannot claim. That we cannot claim for the simple reason that that company is not giving us a tax paid certificate.
Yeah, that's what.
We can claim only where companies give tax paid certificates, and foreign company usually gives tax paid certificate only in the case of dividend.
Okay. And ma'am, can you explain there are different kinds of this Broadcom, maybe that fidelity, what that fair accounting they give,
Yeah,
no?
they are all managers. These people,
Yeah.
what they do is they manage the shares of the company. I mean, company is not going to be like how here we have companies. No, we also have Fidelity. We may have say some
Share
HDFC,
Khan and
Virodha or something.
yeah, Share
Virodha.
Khan or something. Those are the managers of the portfolio. So what will happen is in most of the cases, you will see the statement only coming from the manager of the portfolio, not coming from the company itself.
yes. And some of the companies in HR payroll also they are giving this statement what you have shown, no? The
Yeah.
same thing they will be having. So different people will be giving in a different format. We have to convey the client that show us this kind of a particular statement you give them.
Yeah. No, what I do is now suppose we have a few number of clients from a particular company, then we know how that company is going to give. Then it becomes easier. We can show one sample and say, please ask your HR for this statement. If it is a client from a company that you have not seen before or some format you have not seen before, all you can do is you can ask for everything possible. In the sense, you take it from the depository also, like Fidelity or whoever. You ask the HR also if they are able to provide something. But most of the time, if you ask their overseas, that parent company HR, you will not get anything from there. Local HR may try to provide something, and of course, the foreign deposit holder will provide the information.
Yeah, many times they give so much of dumps, which has they sold it with 100 units and 60 units, the vesting date, every.
So in such cases, what we do, we only focus on when was it exercised, what rate was it exercised at, what was the FMV of that product on that day. Everything else for us is unwanted data. Okay, so we should also dump everything other than that.
And one more, this exchange rate, no, whenever each transaction is being sold and what is the bank credit we have got it, that we will take it as a value for the Indian currency. And
Yes.
whatever the fair market value when we are taking it, no, what is the rate we have to take it for that fair market?
Usually, fair market value, we will take it at whatever was the original in the original perquisite certificate. No, say 2 years back it was exercised. 2 years back, whatever was there in his perquisite certificate, we will take that rate, because at the time of converting or at the time of investing, the company would have given you the rupees amount also. In case rupees amount is not available and only dollar or euro is available, then we go to Google and find what is the rate on that particular date. But what we do to avoid doing this 2 years later is in that particular year, or preferably if the client is cooperative, in every quarter, we make the statement of how much was received, what is the dollar rate or euro rate on that date, and therefore how much is it in rupees, and we freeze that as the purchase price.
Ma'am, where the perquisites is only the difference between the fair market value and the exercise price, right? Whatever the price, that exercise price is maybe $20 they are paying when the date. For that, we also have to take the value of it, right?
On the exercise, no. Repeat, on the exercise date.
See, we have to take a fair market value on the date of exercise date.
Yeah. Okay. The fair market value on the exercise date, that only you take as the purchase.
That only, but here when I have seen one of my clients, they give that fair market value on that day. Whatever the date on that day, suppose in whatever the source, where we need to take this source of exchange rate, we don't know. We are Googling it and taking the rate, and we
That's all we are doing. But ideally, we should have the data that on that particular date, how much rate was applied by the company while converting it into rupees.
Okay.
Can we take RBI exchange rate, ma'am?
We can take RBI exchange rate. See, whichever, even if you take the rate thrown up in Google, it is going to have a few paise difference.
Okay.
So in the long run, it cannot make much unless you are dealing in thousands of shares. Even then, it will make a few rupees difference. It will not. So what we tend to do is we tend to round up on the bigger side. I mean, on the
Ma'am, will it
always
not be
give
available in
advantage to
Form 16
department.
certificate?
Pardon me?
It will also be available in Form 16 certificate, no? What is the value of perquisite which is
Yeah,
given
exactly. We
in
go to 12BA,
ESOP?
but if you are now like he has come to you only in 2025, okay, but he had exercised this in
Earlier,
2021. In such cases only the problem will be there.
yes, it will
And that
be.
the perquisites is only for the difference of the value. It is not for the entire
Exactly.
FMBA,
It is a
right?
difference of the value, but you can establish the rate by that, by working backwards.
Okay. Okay.
Okay. So that is why all this becomes very difficult. So we tend to round off to the advantage of the department, so that department will not ask questions.
Ma'am, one more question in this regard.
Yeah.
So when we have this fidelity statement or any account statement of, we need to show it under foreign asset schedule. Do we need to show this
Yes.
fidelity account also in foreign asset schedule as a depository account or something like that?
Normally, we don't show that fidelity, because then how will you explain that if you have to go to assessing officer for something? To as far as I mean, what practice I have been following, and I know colleagues also have been following, is to only declare it as shares of that XYZ company, alphabet company, or whatever the SAP.
Okay.
Just
Okay.
declare it as shares of the, because they will ask for which is the company address, the company this and all that. We give the address and location of the head office. If it is SAP, then SAP's head office. If it is Alphabet, Alphabet, that way, or Microsoft head office or whatever. Because if you
Ma'am,
start showing it as Fidelity, it is not exactly that a person does not own Fidelity shares. He's owning shares in Microsoft, but they're being held by Fidelity or being transacted by with them.
ma'am, actually in the fidelity, no, they show only the value. It is like a currency only, cash only. They will be showing. They won't be showing any shares on
They
number of
don't show
shares
the
on the
units,
company.
but they will
They
have
will,
these monthly
yeah.
reports will have the units also. We have to search in many reports. Suddenly one report you will find it will have the units.
Lot of research. 4 years I am doing it in fidelity too.
I am
It is
also doing it for about 5 to 6 years, and every year somehow the clients in this sector they keep increasing only, because
yeah.
more and more companies are going for this, more and more employees are going for this. It is finally beneficial to the employee,
No,
because
other depositories they have the shares and the other things they will give. Only the fidelity account is a cash account. They will have only the number of dollars they will be having it. It is not the units where they will show
True,
it.
true.
It
They
is
will
like
not have.
anytime they can draw that money. That is what they show it
But the
as.
thing is,
Ma'am, would you recommend taking the bank statement, taking the debit amounts from bank statement?
the credit amount we will definitely take from the bank statement for the sale. When the finally sale is executed in open market, at that
Hmm.
time we ask for the bank statement, because bank charges and such things also. I mean, rather than even bank statement, we will ask for the SMS that comes from the bank on that date, no, or even the detailed bank statement. SBI, whatever banks are able to give that. So you will get the breakup of what was the bank charges and what was the sale proceed.
And ma'am, what is the common practice? Do we take the credentials from the employee itself to check the ESOP portal? Because there are many reports, and at times the employee is not able to find which one is INR report and which one is
So if
They
the
will not
employee
shell
is
report.
giving
say, they
it,
will only download and give. Most of them, they will only
they
download
will
and
not
give.
see, the employee is giving it, to take it, but it will become so much more headache, and it is so much more
Hmm.
responsibility also.
Yeah.
Right. Okay.
So it is much easier actually to put the onus on the employee, which is what it should be doing, because we are only the tax preparer in this case, return preparer.
Right.
It is his
Right.
responsibility. Always explain to the employee what we do. Why we do things like, we tell the employee we are doing this on FIFO. So in future,
Hmm.
even if you are not filing returns through us, please follow FIFO. Otherwise, you are going to get confused. Things like that.
And
Or
ma'am, there is one more thing which needs to be reported in income tax return, which is the foreign asset schedule, FA
yes,
schedule.
I mentioned that in my
Uh,
presentation.
what is the report like in some portals I've seen like some of my clients give a report which is having the details in the exact format of FA schedule.
Exact.
Uh, exact format of FA schedule.
Okay.
Opening balance, closing balance, peak
Yeah, yeah.
balance, and all that thing.
Do you know what is that report called? Like if I have to generate it from my foreign uh, broker's account, what is that
Again,
report
each
called?
broker is different. Again, each broker is different.
Okay.
A lot of the time, brokers also have now got used to it. So, if the local HR of that company is good, you will be lucky enough to get the report you
Mhm.
need. Otherwise, we
Okay.
just ask the client to sit on one Sunday and generate all the reports which he can and show us samples so that
Okay.
we know which report works.
Ma'am, one question is
But on ESOP portals, these
Ma'am,
reports are not there.
generally we
I've
only
checked
prepare
one of
like
the
opening balances, the date wise, and generally in
opening balance and
we
closing
only
balance is
prepare.
easy to prepare, but how do you calculate the peak balances?
No, the in
What?
between they will have a running account. Most companies, nowadays they give it along with monthly. Either they give it
Hmm.
or the company goes on. The employee goes on the portal and downloads the. If it is a ESPP, where monthly
Hmm.
500 shares are transferred. In such cases, there will be the depository will be giving you the monthly report. So monthly report
Okay.
will say like so many units transferred, so much money. Sometimes in some companies, it is number of units. In some companies, it is value in rupees also. Even that happens. So 1 year you will get more units. 1 month you will get less units.
So why
So
that
Okay.
peak value is as department? First thing,
And like
what is
that
the
peak value,
benefit in?
what is exactly the meaning of that peak value? Is it
For
the
during the
INR
tenure or
balance? Is
during
it
that year,
the
what was the
market
peak,
highest
value,
no,
highest
peak
market value
value
of
is
that particular
dangerous.
share?
Peak value. Peak value means what was it at the highest point during the year. Now there is no way for us also to know the peak
no,
value.
ma'am. No, ma'am. We can check it on the Yahoo means any their website, right?
Yeah.
Share price. We can check it on
we
that
can check
share
it.
price
You
actually.
can check the share price, that which is the peak. But then
Ha.
again, you have to compute on that day how many shares did the employee have. Because if it is sometime in the middle of the year or sometime in the 8th month or 9th month, how many were allotted, how many were sold, and make the peak portfolio. I think
Because
most people are
what
approximating
my
this.
interpretation of peak value is that peak value is the fair market value, highest fair market value of the assets held.
No, highest fair market value on any day. So
On
it
that
can
same
actually
day.
vary because even if your asset, the shares may have gone to the highest value in September. Per share may have gone to say $3,000. But on that day, employee may have been holding only 20 shares. Whereas when it was $1,000, say a few months later, 4 months later, he may have received fresh shares. He may be holding 5,000 shares. Okay, so which is the peak value then? It should mean the peak value of the investments.
Ma'am, we
Yes.
have few questions in the chat box. So let's take that first. How to
Okay.
calculate the purchase price of the RSU at the time of sale?
How to
How to calculate purchase price of RSU at the time of sale?
Okay. So this I think I covered a little before how to calculate purchase value of RSU at time of sell. That I said that if there are a series of these purchases have been there, you go to the oldest purchase. How will you know which is the oldest purchase? That every time you are handling this, uh, every time you are handling the RSU in the form 16 and receiving in form 12B, 12BA, you have to make a table or you have to advise the assessee to make the table and you take the purchase value is always FMV on the date of purchase. Okay, you take the earliest one first. So if you're selling shares on 24 in say now in May 25 and the earliest existing in that the person's portfolio, you can see from your Excel sheet was from 21 February. You take whatever was the value on the in that whichever date of February 21.
Ms. Radha is asking if the ESOP shares are vested but not exercised, should we still disclose as an unlisted share?
No, only on exercise itself, it comes into your perquisite statement.
Okay.
Okay.
One more question is there. In Schedule F, under which line should we be disclose financial interest of an entity or investment in the foreign equity?
In this is in the ITR 2 you are asking, right?
Yes.
There is one line only for foreign equity.
No, there is I think there is a category, right, to disclose financial interest in the entity.
Yeah. There is for which one? For are you saying for foreign entity or for unlisted shares?
Madam, this is for two line items. I mean, this is in the FA schedule. And
Yeah.
about this ESOPs or RSUs received, there are two line items. One is called investment in foreign equity or debt, and one is financial interest in an entity. So
No. It is not financial interest. It must be only in the shares.
One more question is there: TDS deducted as cover to sell is paid to which country?
Actually, it is paid to this country only, India only. But it is still not TDS. Okay, it is still not TDS. It is part of your FERA-FEMA rules. But it is at 30%.
Some cases they calculate 35, 40 depending on their tax rate.
Depending on the rules, tax rate of that company, I think there are other...
no, individual salary bracket. Based on that, they are
there are
doing
other
it.
factors involved, but this is not, it does not come under TDS. I mean, when you do this thing, when you do that whatever sell to cover, it will not come under, it will not be included in TDS. But whereas if the company decides to pay for a ESOP, for instance, Indian companies always pay the TDS. And that will show as TDS deducted for the perquisite.
Administrator, you raise your hand up. I don't know your name. So, do you have any query to ask? Okay. Anyone asked to any query? Or we are good to conclude?
hello. I just have
Yes.
a question, ma'am.
Yes.
In case where I do not know the purchase price in INR, but I know that in USD. Let us say I purchase one share for some 20 USD some 5 years back, and now I am selling it for 100 USD. That 20 USD is to be converted at which rate? Is it today's rate? Because this rule 115 mentions it has to be translated on the last day of month immediately preceding month in which capital asset is transferred. So in case of a long-term capital asset, where maybe at that time 5 years back a dollar was about, let's say, 50 rupees, but today it is at 80 rupees, what rate should I convert that for calculating the capital gains?
It should be and that 5 years back rate. We assume that the employee has kept a track of that. But if not, then like somebody said, take the RBI rate. Worst case, take the Google rate, whatever is coming, because you can round it off, and it has to be on that rate only. But not today's
rate also we can find
because,
out.
sorry, this is to that 5 years back it should have been exercised, which means for the past 5 years this asset belongs to the employee who has been a resident of India.
Correct. But if you look at this rule 115, where it talks about what is the conversion rate in case the income is received in foreign currency, it says in respect of income chargeable under the head capital gains, the last day of the month immediately preceding the month in which capital asset is transferred. So this is the wordings which exactly I'm reproducing whatever mentioned in the rule. So as per this, ideally it should be the rate at which the date on which capital asset is transferred.
No, but as far as purchase is concerned, no, we consider, I mean, at least in practice, both the companies also, because they have to calculate perquisite tax on in India only, no. So, or they have to declare the amount of perquisite. So they would already have translated it 5 years back at that month's rate. So as far as we are concerned, already it has been given a fair market value in rupees. Okay. So I don't think it is fair to, like it is in favor of the assessee, but I don't think it is fair to then say that no, whatever was declared as perquisite, that was at a different rate. Now rate has changed, so now I am taking a purchase price at a higher rate.
Correct.
Okay, whatever was declared as perquisite 5 years back, I think fairly that should be the purchase rate, and therefore for the purchase price alone, that should be the rate of conversion.
On the date of purchase, on the date
Purchase,
of exercise.
when it was exercised. Yeah.
One last question from my side, ma'am. As there is a in the further, if we go for the foreign, they are treat income from the for the financial year they consider January to December, but we consider April to March. So how should we consider that thing?
See, as far as these statements are concerned, it is easy to get a what to say. It is easy to get a statement as on 31st March. Every depository, everybody will be able to give. They will not call it a year-end statement, but they will be able to give you a statement as on 31st March, which is your closing statement. Okay, so there that is not a problem. You can take monthly statements and you can take a closing statement as on end of March.
So if the income is falling in the 2 financial year, then I have to disclose in the 2 financial year, right? In the both the financial years.
No. How will it be in the 2 financial years? What will happen is the tax payment can become like that. If there is a dividend, definitely the US dividend will come at the end of the US financial year, that is 31st December. If it's a UK dividend, then after 30th June, they may give you they may give it at any time, but most commonly after 30th June, they may give you a tax paid certificate. At that time, you take it in whichever year that whichever financial year that the assessee has received it. So yes, it does happen that dividend for the months of January to March often are declared in the following assessment year, because even the assessee is not yet aware of it during that year.
Okay.
I think these things, like if it ever comes to question, it can be explained. It's not like we are escaping any tax. It can be explained away at any point of time to the assessing officer.
Right.
Okay. So that is. I hope it was useful. I have tried.
Yes,
to whatever.
thank you so much for the wonderful
Madam,
session.
just one more question, ma'am. Sorry, before closing.
Yeah.
This foreign assets declaration in the schedule FA, they say it is as on 31st December, whereas income we take it till March, and the schedule AL, assets and liability schedule, should be as on March. So why this mismatch, or will there be no mismatch tomorrow if I declare the same asset on one day in one schedule and on the other day in the other schedule?
You can do that, or you can also, like I said, you can obtain a statement for 31st March to make it easier for our department and declare it as on 31st March.
So even it doesn't matter if we declare it as on 31st March itself, even in schedule FA?
It should not matter. See, any of these things are finally at the discretion of the assessing officer. No, if it comes to that, whatever happens, you have to declare. Whether you declare it here or declare it there, as long as it is not escaping declaration, I think it should be fine. But whatever we do, same as we are making our own, you can say, policies for this accounting policies. Just like I said, make sure it goes on FIFO or LIFO, whichever you are comfortable with. Same way, you keep a consistency from return to return. It should be the same. If you have declared the December statement as closing, then the next year also you declare the December statement only as a closing statement. Okay, so consistency, I think, is the key.
So if every year I declare as on March, shouldn't be a problem.
Shouldn't be a problem. And keep it consistent within the same statement also. And keep it consistent from year to year. Within the same statement, nowadays it is starting to come as defective return. You cannot show one here and one there. Immediately it is throwing up defective return because they have trained the algorithm for that.
Especially the problem might come because, let us say, by March I sold off the shares. So shares were as on December, but in March I sold the shares, and by March there are no shares. So there is no closing balance as on March, but as on December there is a shares.
So that's what I said. No, if you have been showing that, you continue showing it. So if you have to at any time, if you have to reply to department, you have a consistent answer.
No problem is till date we were disclosing only as on March, whereas this year I was thinking should we change that or continue to declare as on March itself even in Schedule FA. I mean, yeah, Schedule FA.
Yeah, you can continue. You can. There is no difficulty. I don't see the difficulty in continuing that because statements can be obtained.
Yeah, statement can be obtained. There's no problem in compiling the information. Only thing is tomorrow they shouldn't say it has to be declared as on December, whereas you are declared as on March. So why is there a mismatch? This query shouldn't come from the department.
I think as long as the information is consistent, no, it will not come. But first of all, because even before anybody in department sees it, it will be seen by our system, computer system, and that algorithm sees only when there is a major change. So I think if you continue consistently, it should be all right. I think it will go because it's the first time that there is going to be this like whatever you are saying, no, end of December, end of March. But I would personally continue. That's what I think that we continue with the end of March only because that is what gives it the consistency of 12 months for the holding.
Thank you, madam. Thank you. But how are you doing this? Just can I understand?
End of March only. We are keeping everything end of March. Wherever end statement, I mean annual statement is say end of December. For the purpose of held at the end of the year, we show 31st March. We only have problems with dividend. So dividend, sometimes we end up showing dividend received in February. We sometimes end up showing it in the next year or claiming in the next year. But so far, we have never been denied a claim filed through 67, even if say the TDS, rather the US tax was deducted in February 23. And I filed that same certificate through Form 67 for the financial year 23-24. I also show that dividend as received in 23-24. Okay, so even though there is a date mismatch, they always give the refund because I think that much, maybe that Form 67, the process may still be manual. I am not aware, but I have seen that even if there is a date mismatch of last quarter and first quarter of our year and their year, we are always getting the rebate.
Thank you, madam. Thank you.
Okay, thanks.
I hope almost query all are done. So thank you so much, Durga ma'am, for the detailed and insightful session, and you are handling of the query very calmly and in the so detailed manner. So it has been truly enlightening session, and I'm sure everyone has get the valuable and clarity of this topic. So we are going to conclude the session, and I would now like to invite. Yes.
There is one small request. Can you share the recording of the session as well? Because there were a lot of critical information which was shared in this, and we might need to refer it back.
Yes, it will be shared on our WhatsApp group. Don't worry.
Okay. Yeah.
So we are moving to conclude our session. Now I would like to invite CA Poonam Pathak ma'am to deliver the vote of thanks and present the certification of appreciation to Durga ma'am as a token of our gratitude for her time and valuable contribution for our team.
Thank you so much, Harshali. And thank you so much, Durga ma'am. Please accept formal vote of thanks on behalf of Team Friday Fleet. And it's so insightful listening to you, those technical terms you have explained in such a easy way. So it seems like a very easy, and there is a lot of queries which was answered. Like I think everyone have queries and those were answered, so it will be helpful for the members. And thank you so much, ma'am. Thank you so much.
Thank you for calling me. Thank you for inviting me. I was a little nervous because it is my first time in a big gathering, but I hope since I was quite passionate about this subject, I hope everybody enjoyed.
Yes, everybody. It's quite helpful for all the members. And thank you, Harshali, for moderating session so wonderfully.
Thank you, Kalpana. Like she was mentioning in starting, like we started this initiative together, and now we have such a good team, and this community is growing. So that credit goes to her. Thank you, Kalpana, for being that rock solid support for this creating this community, and thank you to all the our core team members for working day and night to bring our best for the community members, and thank you for the participants who have been like during this 1.5 hour and listening patiently. Thank you, everyone.
Thank you so much.
Thank you.
Kalpana ma'am, we have a certification of appreciation.
Yeah, please, Ashali,
Yes.
present that.
Let me give you. In the meanwhile, the participants are asking for the contact details of Durga ma'am. So, ma'am, can you please share the?
It is sorry, my email and phone number is in the last slide.
Please share that.
I will share the latest version of the slide with you. I think it is not
Yes,
there
yes,
with
that
you,
will be
Harshali.
helpful.
I will
Yes.
just,
Yeah.
Harshali, are you waiting to share the certificate from my end?
No, I'm sharing. Let me
Okay.
give you. Ma'am was sharing the last slide for our contact details and email ID.
yeah, I will just share. I'll share the whole fresh.
Okay.
Okay, because I
Okay.
made some changes. Just give me 2 minutes. I will share it right now. Yeah, Harshali, I have shared it in the group, episode 53 group.
Okay. We will share in the main group
Yeah, I am
after
not.
this session.
Yeah, please share.
Thank you so much, ma'am, for such an insightful session. And with the flow, you were saying the way you have mentioned at the start that this is something I'm doing day in, day out. So that's the feeling we were getting when you were speaking.
Thank you. Thank you.
Is my screen visible?
Thank you so much. Thank you. Thank you so much.
So we are moving to conclude. Thank you so much, all the team members. Thank you so much, Durga ma'am, for coming us and inviting us for the wonderful session. And this is the requirement of this hour. As we are in the season of filing the income tax return.
Harshali, apologies for interrupting you.
Yeah.
Since we were not having Sunita and actually I'm not invited at the start, our core team member, we have introduced them at the start. If they can share few lines about their journey with us in Friday Fleet. So I'm inviting CA Sunita Rathore and Jyoti. Are you there? CA Jyoti Maru. Yes, your experience and journey and how you're feeling with Friday Fleet. I know it is not announced and informed earlier, but impromptus are always best. As a Toastmaster, I know.
Yeah. Yeah. I am very, very much glad to join Friday Fleet as a member. I have outgrown very much from last 1 year. I can say I have developed much confidence, and I can say that yes, this is the platform where all, especially the women's, we come together and uplift each other. Thank you so much, Poonam Pathak ma'am and Kalpana, for taking the initiative. And for the thank you to the Adukia sir also. He was the, that we say, he is the only backbone to all of us. Yes. Thank you
Yes.
so much. Yes. All our team members, thank you very much. Together we grow. चले,
Yes.
कल्पना हमेशा एक बोलती है चले थे हम अकेले, साथ में कारवां होता गया वही आता है, लेकिन really it's a very good platform. I wish and I would say all the women to come and join us. Thank you so much.
Thank you. Thank you so much, Jyoti.
Thank you,
Yes.
each and every one of you. And every session adds on to my learning. And I heard in the last session, it was mentioned that it's not good to be a jack of all trades, but in our profession, we should have an understanding, if not expertise, of every topic. And these conversations and these, gatherings with the professional colleagues, it adds on to our knowledge, our understanding of topics, as well as a kind of a camaraderie is built up. And I've seen the growth in myself. I was very hesitant when I took the first steps again on my single journey, second innings. And the community of Friday Fleet has actually given me the courage to step outside and take a few chances for myself. And just to just to have that feeling that, yes, I'm not alone. There are people over there who are supporting me, who are ready to give me that little lift that I need. Is all that you need, that adds on to our psyche and the positivity that is around us. So and that is what I've received from the community, and each and every session has been a great learning session for me, for my personal development. And Durga ma'am, I joined late, but whatever I joined, it made me see that, okay, I might think of investing in foreign shares, or ESOP is not something that is going to come to me because I'm not working in a company, from that perspective. But yes, I want to get an understanding as to how it is, and if I'm going to invest in foreign equity and stuff like that. So it broadens your horizon, and you tend to think of things that are out there. The learnings out there. So thank you so much for the time, and thank you for the community, to the community, for being my unseen angel. So thank you.
Thank you.
Thank you so much, Sunita. Something I have not mentioned at the start, that yes, Adukia sir is there. He is the guiding light. But earlier it was me and Poonam. So Poonam, it's like now हम दो थे, अब दो से सात हो गए हैं. Thank you so much, Harshali, our moderator. If you would like to say, as you were concluding, I have interrupted you. Apologies for that, and this was not in our minute to minute. Apologies, Durga ma'am, for you had tiring session. Continuously, you are speaking during your session, after Q&A, and then we have kept you holding for our discussion and announcement. Thank you so much, ma'am. Back to you, Harshali. If Poonam would like to add anything at the end. If not, then back to Harshali.
Poonam ma'am,
Memory is not
if you
just
would like
obsolete.
to share something, please go ahead. Then I will
There's a
carry
memory.
on then conclude the session.
It is a memory, and
I
then
think we can
it
conclude now.
responds every moment, 24/7.
As already shared by the Kalpana ma'am, and as he announced the core team members, अगर मैं स्टीम के साथ जुड़ने के बाद की अगर बात का एक्सपीरियंस अगर मैं शेयर करूँ तो शायद एक सेशन और लग जाएगा, बिकॉज आई हैव सो मेनी थिंग्स टू शेयर एंड आई हैव सो मच एक्सपीरियंस इन दैट। टीम में जुड़ने के बाद आई हैव गेट कॉन्फिडेंस. I come out of my comfort zone because of Kalpana ma'am. She always push me. नहीं आपको करना है. You have to do this and this is my order, not an uh, request. So this is how I come, and it is. I feel sometimes I feel very proud to be a part of this community. And behind, even though as Sunita ma'am share की मुझे क्या काम है ये फॉरेन शेयर्स का. आई एम नॉट आई बट आई नीड अवेयर ऑफ दिस. बट बहुत बार ऐसा होता है कि जब क्लाइंट हमको कॉल लगा के पूछता है, या बहुत बार ऐसा होता है कि आप सीए ऑल्सो यू मस्ट हैव नो अबाउट दिस थिंग्स. आप सीए तो आपको सारी जानकारी होना चाहिए, भले आप वो काम करते हो या नहीं करते हो, दैट्स अ डिफरेंट थिंग. सो दैट्स द थिंग. और वी आर in the month we are concluding session every week on every Friday on the self development and as for the technical topics to growth your practice. So this is a wonderful platform to join. Not you are joining for the core team, but be a part of the team and see the session, attend the session, participate in the session to gain the knowledge and grow. That's for from my side for the feedback of the Friday plate. And now we are going to finally conclude the session. So thank you so much, Durga ma'am, for being at the last moment till the end with us and listen to us. Right. Thank you so much, Sunita ma'am. Thank you so much, Kalpana ma'am, for being a part and taking this initiative of creating Friday Plate. Thank you so much, Poona ma'am. And thank you so much. I would like to core team members of the Friday Plate who are keeping hand in hand to making all the sessions successful. Jyoti Maru, CA Jyoti Maru, Gunjan, who is not with us, CA Aishwarya. So all I'm very thankful for all this and all the participants who are listening till this and thank you so much. So हम फिर से मिलेंगे next Friday.
Thank you. Thank you.
Again, thank you so much, Durga ma'am. We will share the group invite link of our main group. We would request you to join. And we were discussing during the session internally that if we will see if a workshop can be possible, because now we are coming up, if there is a more demand of any of the specific topic, we come up with a 5 to 6 hours workshop spread into 2 to 3 days with a minimal fees. So our team will reach out to you if your time permits you to do so.
Sure.
Thank
No,
you.
my pleasure. Always to say, to share the knowledge is always a happy thing.
We can see that spark on your face when you share your experience.
Thank you so much. Thank you.
Thank you so much, ma'am.
Yeah, thanks.
Thank you so much.
Bye. Have a great weekend.
Bye.
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 Great weekend.
Bye.